Okay, so I am on date night currently, and my date has left me to go look at the men's section. All right, we just so happen to walk into this Yonkers, and this Yonkers is actually going out of business. But I'm going to use this as a teachable moment to explain Fibonacci. Okay, you're going to have to put your visual cap on. So look at this, guys. You see tickets all over the store that say 20% off. 20% off, all right? If you look at your Fibonacci retracement tool, it's got different types of, levels of retracing. So for instance, you've got, 0, like it has basically the market, if it made a move up, all right, it made a move up, if it's retraced 0, that means of that move up, it hasn't gone down. But if it retraces to 23%, that means it's gone down 23% of the way. So like it went up, and it went down 23%. So a quarter of the way. It's gone down about a quarter of the way. That's the retracement. Then there's the 38% retracement, and then the 50. So now it's 50%. So it went up this way, but it's now gone down half of what it went up originally. All right? And then there's a 61.8. And then there's the other ones. All right? So we're going to start there. I want y'all to notice, like when you go into the store, I'm in Yonkers, and Yonkers, they're giving you that full-blown price. Everything's marked up, everything. I don't like to pay that price because I'm cheap, all right? Let me make sure I'm looking here. I don't like to pay that price because I'm cheap. So when I come to the store and I'm just picking a shirt, all right, let me just find one. If I come to the store and this store has a price tag of $79, all right? $79, full price. Well, my cheap self says, I don't want to pay what everybody else is paying. I don't want to pay, $79. But if I knew that I had a special tool that said, hey, today is $79, but if you come back on Monday, it's going to be 25% off. All right? Then would you be like, I'm coming back on Monday, for real. But what if that tool also said, hey, you can come back Monday and get 25% off. But if you come back on Tuesday, you can get 38% off. What you gonna do? Oh, man, give me that 38%, for real. But what about if you knew that same tool said, hey, if you come back on Wednesday, 50% off. We'll give you 50%. You're really gonna be thinking like, oh, snap, that's good stuff, okay? But if you come back on Thursday, you could get 61.8% off the price of that $79 shirt that you love so much. So now here's the catch. You can come on Monday and get to 25%. But if you decide to wait for that 50% or that 38%, the people might have come and bought it all up. Maybe everybody thought that 20% was good enough and they just rushed the stores, pulled everything off the shelf. And so now when you're trying to wait for your 38% retracement, there's no shirts left, But maybe not. Maybe there's a bunch of people that bought it 20%, and then there's a lot of people saying, I'm going to wait till Tuesday. Let me get that 38%. So they waited, there's still clothes on the shelves Monday, right? Tuesday's 38% off day. So those people come in. You're risking, if you say, well, I only want to buy if it's 50% off, so I'm going to wait till Wednesday. You don't know if there's going to be anything left for you to buy, all right? You understand what I'm saying? So now, if you come back on Wednesday, you might just be able to get that 50%. And that might just be it. So anybody who had 61.8% on their heart, anybody who's trying to wait out Thursday, the shelves are bare and there's nothing else. And basically they missed their opportunity to buy. You understand? So let me put that in perspective for you, okay? So remember, you got the Fibonacci tool, all right? Basically, the tool is helping you know that this is the price. If you get no retracement at all, you're paying full price. You're going to pay $79 for that shirt today. But do know, if you choose to pay that full price and the market does choose to retrace, that means the moment you buy it, you're immediately losing value. That means you're in the negative. You're drawing down. And if you're going to try to sell it for a profit, it's going to be a lot harder for you to sell it for a profit. Understand? But if you wait, and you just say, look, I will only, entertain it if it gets to at least 38. That means you're going to wait till Tuesday, all right? You're that person that's waiting till Tuesday. But in the market, that's like, I will put my buy limit order at the 38% retracement, saying I will only buy it at this level. I don't want to buy price unless it gets to this level. That's what you're saying. That doesn't mean that people might come on Wednesday and be able to get 50%. So some people will be lucky, I won't say luck, but some people will be, if that waited patiently, if they wait till Wednesday, they'll get the full retracement. The little 50%, they'll get 50%. Maybe you bought at 38%, but then that thing dropped in value some more. So those people came in and got it at 50%. So that means you're in drawdown. And the poor, unfortunate soul who bought that thing right at the very top paid $79. And now you got somebody who was able to pay half the price. And if that thing was able to turn around and go the other way, now those people who bought at 50% are happy, making a good profit off of it. People who bought at 38% are happy. Eventually people who bought at the 20% will be happy. And then that poor, unfortunate soul might just be happy to break even when the market gets back up there. If it happens to go past that, that would be the high. That 79 was the high. If the market so happens to go above that, and now the value of that shirt is now $100, then they made a little profit. But everybody who bought at 50% made even more profit. Anybody bought at 38% made more profit than the poor, unfortunate soul who bought the $79 shirt for full price. So that's like a analogy to how you use Fibonacci. That's not how you apply the tool, but that's to help you understand why you apply the tool and how you can use that tool to get you the best entries. To get you, you're not always going to get what you want. Like the same poor people that said, oh, I want to wait till Thursday when the market retraces to 61.8, when I can get a 61.8% discount on that shirt. Because people who were buying at 20 and 30 and 50 bought up all the merchandise, so there's nothing for anybody who is waiting for 61.8 or lower. Does that make sense? And this is how I look at it. If I'm getting 75%, now that's nice, but nobody, who's going to get something for 100% off? That means that thing has absolutely no value, and most likely it's going to continue to decrease in value. So for me, I don't like to trade anything or buy anything after it goes past the 61.8. That's just me. There are people that like, getting 70% off and 80% off. But me, I feel like that thing is so, the value of it is so low that perhaps it's not going to have any value anymore. That's Adaeze's take on it. That does not mean that's what it is, all right? But now you have a good idea of how to think about Fibonacci as far as, when you're looking to put a buy in, and instead of paying at full price when the market's at its ultimate high, you don't want to buy at the high. You want to wait till that thing starts to turn, starts to drop in value, and then you use the tool to figure out, where would I buy? So those levels, instead of them being 23 and the 50 and the 38, think of those as days. So on this day, I can get 25% off. On that day, I can get 38% off and such and such. All right, that's it. I'm stopping now. I'll make a video that shows actually how to actually use the tool. All right, hope this was helpful. Okay, bye-bye, guys.